The newest rite of passage for cloud companies: start your own venture arm. Salesforce did it, so did Slack, the company it has yet to officially buy. Further back, Workday tried it. More recently, there's Okta, Zoom and Snowflake's out writing checks to startups. The latest to the trend is Coupa, the spend management software company recently trading at a market cap of $17 billion. Coupa Ventures is debuting as a $50 million fund, with 2 investments already made, though CEO Rob Bernstein swears he has no interest in turning VC. "I want to be very clear, the driver here is not financial," Bernstein says. "If we wanted to go become venture capitalists ourselves, people would leave to start a VC firm." By investing $500,000 to $2.5 million initial checks in companies Series A stage and beyond, San Mateo, California-based Coupa hopes to back startups that work well with its own software, part of a bid to be more of a platform or system of record for the finance side of a company's operations. Startups that take money from Coupa will have a more formalized reason to receive advice and support from Bernstein and his executives. Coupa can also bring its portfolio into potential deals with its own customer base. There becomes a business reason from the Coupa side to engage a bit more deeply, Bernstein says. And they get the strategic point of view from us at a higher level in the marketplace. Coupa Ventures has backed 2 companies so far: Xylo, which helps companies manage their SaaS subscriptions, and SourceDay, which makes supply chain compliance software. At Xylo, CEO Eric Christopher said the 2 companies already had nearly 100 joint customers. "I think it's just a natural fit, where they can help us get a seat at the table," he says. "Having access to what they're seeing with their customers is going to allow us to move faster and build products. That's how the strategic investor relationship is supposed to work, at least, and Coupa is far from the only company playing in the space." In addition to cloud standouts like Snowflake and Zoom, the giants have their own venture arms. Databricks, for example, is backed by Amazon, Google and Microsoft. Motives can vary from ensuring goodwill and use of a company's own platforms and tools, and financial return. When Celonis recently raised $1 billion at an $11 billion valuation, it included new investor Splunk Ventures in the round. That was a departure for the $150 million fund launched in 2019, says CEO Doug Merritt. "Both are customers of the other," Merritt says. "Both have been migrating to the cloud in recent years. But backing a company so late in the game and at such a valuation isn't the norm with such funds," Merritt says. "We want to focus on the 3 people and a dog in the garage, and we're not moving away from that," he says. Nor does Splunk expect to change Celonis' decision-making or trajectory too much.